You may remember that in 2021, the Federal Reserve warned that meme stocks could be bad for the economy. Everything the Fed says seems to be the same. Stay tuned, and let's make money. To begin, let us talk about buildup. This image was shared on Twitter by Peruvian Bull, along with the comment Gaslighting 101. Reddit day traders are back to buying stocks that are risky and more likely to go down in value. According to this market source story, regular investors have started the year by investing record amounts in stocks, which shows a strong return to a positive outlook. They say that investors are picking risky speculative assets in a way that reminds them of the meme stock boom of 2021, even though these assets were the biggest losers during last year's rising rate scenario. But it's clear that strategists are telling us that our excitement might not be well placed and could cause another stock market crash. As was already said, this looks a lot like the Federal Reserve's study on financial stability from November 2021. That study said meme stocks are dangerous too. Financial stability and, by extension, the whole global financial system. Oh, a joke. Some of the biggest market makers and financial institutions could go out of business because of stock squeezing. This shows how open these places were to an MC in GameStop as early as 2021, but it looks like regular people are now putting record amounts of money into meme stocks and other risky or speculative investments that could cause an even bigger crash. It says that after a week in 2022, the average trader who started the stock market craze 2 years ago is now ignoring Fed Chair Jerome Powell's hawkishness and pushing stocks higher. Additionally, it says that the overall economy is very different, even though the level of optimism is similar to the meme stock craze of the previous year. They say that small buyers are bullish, even though the economy is bad. I think the Fed is afraid that we will buy and hold more shares of AMC and GameStop because of this. Even though it said, "Don't fight the Fed," regular buyers don't just seem to dislike the Federal Reserve. They seem to laugh at it as well. Because the Fed has been talking about it, some hedge funds are buying big shares of GameStop and MC, which makes it look like they are on our side. They say that Bridgewater almost tripled its shares, while small investors like us seem to be both making fun of and opposing the Federal Reserve. In the last 3 months of 2022, 0.72 rose salaries at GameStop and bought a 108 million % investment in Tesla through MC Holdings and GameStop. But basically, they're saying that this will only cause the stock market to crash even more, and the Fed won't even step in to save the stocks. There are a lot of the same fake news stories from major news outlets. The center put a hold on the stock and tweeted, "Good gracious, the mainstream media has no shame anymore. Talk about Wall Street being sour and angry as hell," he said. "They're going to be erased." This Yahoo piece is called "What's Driving Trash Stocks Like an MC Higher This Year?" It's clear that it's not just the SEC, not only the Federal Reserve, but also the biggest hedge funds, which own and control most of the major media, are trying to spread the word that AMC and GameStop are bad investments. It's clear that they're doing everything they can to get small owners like us to sell our shares before there's a squeeze. You might be wondering why these hedge funds are so scared and why these market makers are going to fall apart. As James wrote, the New York Stock Exchange threshold securities list has now been up for 15 days. He has even written down every day that the MC has been on this list of legal shows. We are now on the 14th or 15th illegal day. The evidence we have is strong and can be checked to show that these market makers are passing the buck with the FTDs to keep an MC on this list of regulations, where the SEC doesn't seem to be doing anything. Also, as Batman from Stawn tweets, there aren't enough shares to go around, and the MC is on this list of threshold securities, which has made it ridiculously expensive to borrow money and put pressure on short sellers for most of 2022. Lots of shares were available to borrow at a very low cost. The cost to borrow started going up again in June and July 2022, 1 year after the anniversary of the MC run-up. The cost to borrow really went up when FTX went bankrupt and 400 million. Tokenized synthetics disappeared all at once. There haven't been many MC shares to borrow, and the cost of borrowing them has been through the roof. There must be a lot of pressure on these shorts, since they have so many big short positions and haven't been able to find any real MC shares to cover them. Also, they can't find and borrow any MC shares because the borrow fee is too high, and there aren't enough shares left to find. This is clearly causing a lot of FTDs, and an MC being on the threshold stocks list for more than 13 days for the first time ever. I also found something very interesting. This tweet from Mo Astronaut. He said that at these prices, he can't help himself and that people will hate themselves or be afraid. But Mo is greedy himself. Valmo bought shares in Bed Bath & Beyond for more than $200,000 not long ago, giving him a huge stake in the company. You might be wondering how Mo can buy more than 120,000 Bed Bath & Beyond shares on a fill or cancel order, which means that the deal will not go through unless all 66,000 shares are bought at 1.52 cents each. At the moment, Citadel Derivatives Group is the only company that doesn't seem to have any trouble filling 120,000 shares for Bed Bath & Beyond. This is because there aren't enough real shares on the market to sell more than 12 shares at the same price at any given time. Citadel is clearly breaking the law by selling fake shares for everyone to see. It doesn't even surprise me. There's no doubt that Citadel can find any shares, even though I think it's a different stock at Bed Bath & Beyond. Brokers, trade platforms, and market makers are having a hard time finding any MC shares, which is why borrowing fees are so high. It wouldn't surprise me at all if MC and GameStop came up again in the Fed's report on financial security, because the MC cost to borrow fee is so high right now. This is especially true after this crazy quarter or month and a half, during which we saw riskier stocks like Coinbase, Carvana, and many others rise to the top. Many individual investors know that we own shares in GameStop and MC, and many of you have been buying even more shares. It's clear that the Fed is trying to scare the markets by talking about more rate hikes and being more hawkish than dovish. The Federal Reserve is likely to talk about meme stocks again, pointing out that their rise is bad for the financial system and financial security because these market makers and hedge funds will have to close down. I really hope that pension funds will change how much risk they are taking during the upcoming MC squeeze and don't go bankrupt during it. Instead, they should let these market makers and bad guys fall apart. At the same time, a simulation tweeted that it doesn't matter what the price is. He will still hold even if it drops to zero. One share, which they haven't covered yet. At this point, I really hope that the biggest banks and pension funds have moved their risk to other hedge funds and market makers and let those market makers go bankrupt instead. Find out if an MC is worth $4,610,220 or $1 per share. If the shorts haven't covered, I don't think the price is that important. He said that because he knows what he's keeping and thinks that soon there will be pressure. He doesn't mind Reed. Spence, for some reason, also thinks that the squeeze is coming soon and that the key is for MC and Monkey to become one. After the ape switch, he changed his mind again and said that short sellers would never have a better chance to cover. He said that the MC might be around $35 after the reverse split and that their new ape shares, which were turned into an MC at a cost average of $6.60 to $10 a share, are ready to be bought to put pressure on the price. He said, "I hope an MC drops at least $150 per share so I can get out of the market. I can't tell you what the best price is to sell your shares at because I don't give business advice." Spencer, on the other hand, has changed his mind again and now believes that the pinch will come from an MC switch and a yes vote. Spencer seems to know that the Fed is still worried and that the squeeze is making some small buyers nervous. That's all we have today. What do you think about an MC stock? Let us know in the spot below for comments. Thank you for watching.